I want to teach you all how to become consistently profitable traders. So in today's video, I'm going to be showing you guys the exact 4-step simple trading model that allowed me to have my best trading month ever in September. And to back that up, I'm going to show you guys my Top Step September stats. Okay, so as you can see, we circled the month of September. Now, yes, I have started using my funded futures on top of Top Step. I also have a live fund to Tradeovate, but most of my trades came on my Top Step XFAs in the month of September, and a lot of you guys saw me execute some of these live in my free trading Discord, linked to my YouTube bio. Okay, so with this strategy, the things that really matter with any strategy is what's the win rate in relation to the average win versus loss, right? Because I could have a 60% win rate, but my average win could be 0.5 times the size of my average loss. In which case, you could clickbait and say, oh, I have a 60% win rate. Great strategy, right? Well, if you dive deeper into said strat, it's actually terrible because they're winning only 0.5 times the size of their losses on average, which means they're a losing trader. So here, I'm showing you guys the context over a whole month, 50 plus trade sample size. We have a 57% win rate using this strategy this month with a 1.73 average win versus average loss, which means that I'm making an average of 1.7 times every win what I make or what I lose on every loss, and I'm winning 57, almost 58% of the time, right? So those are the numbers behind it. Rather than showing you a P&L that's unquantifiable, I'm showing you the serious math and statistics behind this. And like I said, this was my best month, but I'm getting better at executing the strategy, and it has continuously shown positive net returns in the past, even though, like I said, this month was specifically good. I'm not going to beat around the bush and say it wasn't. This is not something you could expect every month ever, but it's a step in the right direction as someone who's been working very hard to perfect this strategy. So what is the strategy? We're going to get right into it, and you guys have all heard me talk about it, but I'm going to give a few examples of the trades that I took the last few days of the month, since I haven't done a trade recap in a little bit. And then I'm going to show you guys some secrets about draw and liquidity and even some stuff about discipline and risk management. So with that being said, my strategy, STIM, STIM. You guys have all probably heard it if you watch my videos. Now, what does that mean? It's very, very simple. So as you guys know, STIM stands for sweep, tap, inversion, momentum. So we will slide up a bit and show you guys exactly what that looks like. So say we want to take longs at any given area, right? And you see a collection of lows in this spot, whatever, and you always want to have a good target for these trades. We'll get into that in a bit, but just assume that you've got a great overhead target and you see some kind of stacked lows down in this area. What you're going to want to see for the S, which is the sweep, is a move under these lows to take them out, okay? So you want to sweep the liquidity and get your entry after a lot of people have already been shaken out of longs or have already chased shorts on this break under the previous low. That's when you're going to wait for a reaction back to the upside. And on that, you also ideally want to be sweeping liquidity that rests inside of a higher time frame gap. So say, the whole previous day we had a nice leg up or whatever, and then we kind of chopped around. Say that we had a bullish 4-hour fair value gap or something right here from the day before, and you notice that these lows are inside of it. So when you're sweeping down, you're now also delivering off of that bullish fair value gap, which is where the T comes in, right? And so we'll kind of just label this as we go. So we'll do the letter S right here, right? Because this was the liquidity sweep right here. And then we'll do the letter T right here as well, because we also tapped into a higher time frame fair value gap, which is just helping us trade back into an imbalance to later expand again. Then you want to go onto your time frame of entry. For me, it happens to usually be, I would say, the 1, 2, 3, or 5 minute chart. And you're going to want to see an inversion fair value gap. So what does that mean? On this move down, when you swept liquidity, ideally you want to see it have left a bearish fair value gap. And then on the way back up, you want to see a bullish move and close on the same time frame above that said bearish gap, which is a very bullish signal, right? Because if we're invalidating a bearish fair value gap we made on the way down, that must mean the buyers are very strong. So the momentum is going to be back in the bull's favor, and that's where you want to take your longs. And the M is very self-explanatory, momentum, okay? You want to see good momentum while all this happens. The more V-shaped this whole move can be, the better. And just think about it that way. So like if you have, say, you're chopping under here for a while and then you finally kind of crawl through and invert it hours later, probably not the best trade to take, right? So you want to see good momentum. And then, like I said, the last part, which isn't really in the acronym, but it is just an unwritten rule for almost any trader, you want to have a good logical target. So in this sense right here, say we just have a ton of relative equal highs up here. So you're going to want to target those, right? A lot of LRLR, low resistance liquidity. So I'm going to go into some examples of trades that I took using this criteria this week, okay? And so it's really important to be watching for targets. So like anytime you trade, anytime you're at your charts in the morning, the main thing you want to be thinking of is what happened yesterday, what happened last night, what happened a few hours ago, whatever. And you want to look on multiple time frames for viable targets. Now, the reason this is because sometimes you can find great draws on liquidity that don't appear super obvious. And an example of that was yesterday when we had these exact equal lows on ES. Now, if you guys don't know, when you have exact equal lows several candles apart, meaning the bottom of these candles is the exact same to the tick on ES, that's going to be a very good draw on liquidity. Now, what that basically means is that liquidity is resting here and the market is probably going to want to come take this out, especially before making any type of move higher, right? Because this is a swing low point of liquidity, sell side liquidity. So market's going to want to come down and take that out most likely before moving much higher. So what you can do, knowing that market's going to want to revisit this area, is use it as a target. That is a draw on liquidity, okay? DOL, draw on liquidity. Equal lows, one of the best DOLs, one of the best draws on liquidity. So in the morning, this was basically about 8:30 a.m. in the pre-market yesterday. And what I really liked was that we had, if you go onto the higher time frames, we're on the 5-minute right now. If you go onto the 15, we had a bearish fair value gap right here, okay? So what I was kind of hoping to do in the morning, because I was going to target those equal lows and I knew it, was that I wanted some type of retracement into this bearish gap so that we could head lower from there. The biggest reason why I also wanted that was because if you look, we had a lot of relative equal highs right here and I wanted to take them all out, okay? So if you play it into the morning, we had a nice move up. We took out all of this buy side liquidity, right? All these highs, we sweep them. And at that point, I'm looking to manipulate back to the downside, right? I'm looking to have a nice delivery to the downside because we've already manipulated back into this bearish gap that I said was going to be a good target, at least to start looking for an entry. Not a target as in I took a trade up to that, but a target as in I wanted to see it traded into before I really looked to take any of my own trades. And so yeah, the morning was pretty choppy, but I was very confident we were going to take the equal lows. And so if you go to the 1-minute chart, right? So this was where I ended up getting my entry, right around here. Now, my idea with this trade when I took it, like I said, was to target those equal lows. I knew that we had a choppy morning. I also knew that I did not want to see us trade back above this high. So because the morning was pretty choppy, I ended up being a little bit looser with my stop loss. Okay, so sometimes I will stop out on a close above this bearish inversion right here. So this candle right here was my entry, okay? And we start to get a little bit of chop once I get in. So as you can see, we start to kind of retest this high range right here. But since we never had a convincing close back above this bearish inversion, I never actually stopped out. So I don't trade with a hard stop. The only time I'll have a hard stop is if we hit a point of interest where I think that it would be wise to set my stop to break even. So when I took this trade, I knew that this internal low right here that we kind of failed to break under multiple times, right? This general area, especially this swing low, was going to be a point where maybe the trade could fail again and we could bounce. So just understand that I got in once we had this inversion right here, right? Because this was all an extension of the delivery off that 15-minute bear gap I showed you, and we had already swept out the highs. So this was just noise after the sweep and delivery. So I still felt very good about this trade, especially as long as, like I said, we did not exceed that old high that was the liquidity sweep. So that was a very important factor for me. We did not want to trade back above this, and we didn't end up doing it, at least not before I got out of my trade for full profit. But like I said, once we hit this internal swing low, I'm setting my stop to break even. Other than that, I kind of just wait and see once we're still around this general area, because if we're in a spot where there's no logical stop to break even place, I will just wait it out. And if I get stopped out, if we go up to these highs, worst comes to worst, it is what it is, right? And so as you can see, We'll kind of just put the RR thing on here. This was about a 1.5, I remember, 1.2. Yeah, it was like 1.35, 1.4. So in that general range. And we'll just kind of play it out. So we ended up having a fine, clean move down to my lows, right? And so we did have a little bit of chop here, but it was a pretty quick trade. And this trade was done at about 10:30. So had to sit through some chop, but like I said, we got all the steps. We got an inversion right there. We'd already swept the pre-market highs. We had delivery off a 15-minute bearish gap that we never closed above on the 15 minutes, so it was still valid. And most importantly, we had a good momentum on this inversion, right? You can see we start to sell through, and even though we retest the whole thing, the momentum is still very good, all the way down here. So great trade. And also, obviously, probably the most important thing, we had a strong draw on liquidity, which was these exact equal lows, and they hit to the tick, okay? They hit perfectly, and we got out for full profit right there. Now, I'm going to show you guys another setup that I ended up taking today that was honestly a very short-term scalp, like one of the scalpier trades I've done in a while. It was a very small target, very small stop loss relative to most of my trades, but I was targeting NQ all-time highs, which we just took, but obviously they were basically exact equal highs, and all-time highs are also a great draw on liquidity, especially if you're right by them. So that's one other thing I will say. Pay attention to all-time highs, because if you're right near them, it's going to be a good target most of the time. And so I'm going to show you guys exactly the play I took. So we had right here, this was my target, all-time highs, obviously, and we had hit all-time highs on ES on this exact candle right here. Okay, so right here we had hit all-time highs on ES at this 14 candle. So we had this kind of negative sell right afterwards, even though we hadn't hit the all-time highs on NQ, because obviously when you hit them on ES, it's going to affect NQ as well. And when we hit them on ES, we just happen to wick a bit, start selling off a little bit. So basically, I wasn't going to be bearish this close to all-time highs, so I just kind of waited to see what was happening. I always try to be by my charts when indices are right at or right near all-time highs, because you can catch little moves like exactly what I'm about to show you. So as you can see, we end up inverting this bearish gap that we make on the way down. And so I go long there, basically targeting all-time highs, and it was a pretty straightforward trade. So my stop loss was going to be any type of movement under that low, right? And so we'll go right here. Since this was a scalp, I wanted it to be about 1-to-1. So I ended up making it about 1-to-1. We were going to stop out under that swing low right there. And as you guys can see, it was another just pretty simple trade. We did have some manipulation go on up here. We came close, sold off like a few times, but we ended up in the clear, and it very easily ended up ticking all-time highs. So even stuff like that, I mean, this trade actually ended up taking longer than the other example I showed you, which was a bigger, RR, more points worth of trade. But on these scalps, I just size a little bit heavier, because since it's less points that I'm targeting, I still want to have the same amount of profit that I'd, go for on a normal trade, a normal size trade. So I do run dynamic sizing in that way. But like I said, it was a very free layup type of trade that it's very easy. They don't present themselves super often, but when they do, you'd be a fool not to take it, right? So we obviously have an inversion here, a bearish inversion. A lot of people probably go short based off that, but since we're so close to all-time highs, I can't do it. I can't short that, and instead I'm looking for longs back to all-time highs, because we have not taken them out, and they're equal highs, and it's NQ, and we're so close. I mean, we're talking, let's measure this out. At that point, we were 100 points away from all-time highs, or sorry, not 100 points, 100 ticks, 25 points from all-time highs, right? So 0.1%. So I knew that we had a very strong likelihood of hitting and maybe even closing at all-time highs today, but it doesn't matter where we close as long as we hit my trades in profit, right? So that was the goal, right? And it's a layup of a trade. Once again, there's really little thought that has to go into this. And we obviously get a sweep, right? This is a manipulative move down. Now, we don't exactly tap out of a higher time frame fair value gap right here, but we do get the nice inversion with the super clean momentum and an obvious draw on liquidity. So even with the STIM model, if you have all 4 steps and a great draw on liquidity, that's the ideal scenario. But even in some cases, if you don't have all 4 steps perfectly aligning, as long as the draw on liquidity is good and you've got the obvious good momentum inversion like we did right here, then you're probably going to be fine to trade. So that's my 2 cents about it. I know that I teach, follow all 4 steps to the T, and that's what I almost always do. But in this case like this, when we're right by equal all-time highs, and ES has already hit them and NQ makes an inversion like this, that just, I mean, and it comes with screen time and experience to an extent to know this type of stuff. But when you see something like this, an inversion bearish, and it just gets cooked right away and rebalanced, it's just, in my head, that's like an immediate light bulb that we're just going to rip up to all-time highs. And that's exactly what happened. So when the market tosses you a layup of a trade, you have to take it. And if you start practicing the model more and more, you'll start taking the layups. You'll stop missing them, right? Think about it. It's like a free throw sometimes with these trades. If you're shit at making free throws, you're probably not going to make a ton. But if you continue to practice free throws, you're going to start becoming a better free throw shooter. And at some point, you're going to be, ice in your veins, you're going to be money. The more real time, real movement, real pip by pip type of practice you get, the better you're going to become at consistently hitting these type of free throws. That's why, because some people would hesitate to take this. Maybe they had a bad morning, right? Maybe they just don't feel like trading it because they're not completely sure if it's a good trade. No, you take trades like this, okay? If it aligns with your system, which it does with mine, that's a trade you take 10 out of 10 times, okay? So I just wanted to go over that to kind of help you guys understand what my thought process was on this long, which ended up being very easy. A lot of people want to hear about trading psychology, and I mean, honestly, it's the type of thing that I can't really teach anybody, but I can definitely talk to them about how I view things and how I go about my stuff, because I think that you can take examples from other people, but real discipline can only be learned through hard lessons in a lot of ways with trading, right? Like, you have to kind of feel that pain of losing and losing and losing to start really letting it click in your head that, all right, I need to make a change. Something needs to change. But believe me, these numbers right here are nice, and I'm not going to victory lap about it, right? It's 1 month. And obviously, like I said, if you guys have been following my channel, following me in the Discord, seeing my performance, you know that I consistently do put up good numbers with this model. But everyone has bad weeks or bad months. I'll have more bad months, but this is a pretty solid indicator of a working strategy, right? The numbers don't lie. You can't argue with math, okay? 57% win rate. On those 57% of wins, I'm making 1.73 more than I would lose on my, 43% of losses, okay? So that's kind of like the way you got to think about it, and maybe that'll help you guys understand how good this strategy really is so you can try it for yourself. But in terms of discipline, right, the biggest thing is just showing up consistently, being prepared, right? One of my biggest things is waking up at 8:30, eating breakfast, doing whatever, and then getting on the charts at 9. And if it's a red folder news day, I'm on the charts at 8:15, 8:30. If you're not early, you're late. That's a big thing with trading, because obviously you all know the market opens, the stock market, whatever, the liquidity increases at 9:30. But you need to be preparing on the charts before that if you expect these results, because I'm telling you, if I hadn't gone on the charts at 9:15 every day, or 9 even, I would not have had half of the winning trades I did, because that's the time when you have to find your targets and literally make your plan for the entire day. I have a channel in my free trading Discord. Like I said, it's free, linked in bio, no credit card, no email, none of that. Just literally click the link and you're in. And I have a whole channel dedicated to posting my daily bias, where I, for free, share my thoughts going into the market day, right? I have to do that for myself. I do it for you guys too, you guys who support. I want to help you guys out too to find good draws and liquidity, all that. That's why I post it. But I do it for myself because you have to be preparing. You have to lock in and actually get up on time. You can't be, a lazy fat piece of shit, right? Sitting in your bed, munching on Pop-Tarts, scrolling TikTok till 9:28, and then get right up on your computer, creaky ass swivel chair. You cannot be expecting good results if you're going to behave that way, bro. It's just not how it works. You got to be prepared and act like you actually want it. Stop being a lazy piece of shit. If you're not trading well, but you're getting up right when market opens every single day, you deserve to lose. I'm just going to say how it is. Other thing, if you're greedy and you're chasing payouts and you're chasing money, you're never going to succeed. If you are looking at trading as a way that you need to have as a source of income, you need it so fast, you're never going to succeed. That's why I recommend to people, get a fucking job. Like, get a job. If you need money and you don't have a financial security blanket and you turn to trading and say, oh, I'm gonna make it out of unemployment with trading, I'm gonna avoid Wendy's with trading. No, you're not. You're gonna lose all your allowance money and then be forced to work at Wendy's. So I've never had a 9 to 5. I actually have always run my own businesses, but like there's nothing wrong with getting a job if it's going to help you build some capital to be a comfortable trader. Because like I said, the traders who typically do pretty poorly, and I'm even speaking from my own experience, is when you start to treat it like you need it as your source of income and livelihood. That's a problem. You need a security blanket because that'll help you keep a clearer mind and make like less desperate decisions. And I know that's probably not the case for everybody. I know there are some people that like feel like they perform best with their backs against the wall, and that could be true for a short period of time, but it's not good for your mental if the only source of income you have is trading, or even worse, if trading is not even yet a consistent source of income and you rely on the fact that it has to become this. No. Treat trading like a video game. Be there for the journey. Be there for the self-improvement. If you're a lazy piece of shit that got up at 11 a.m. every day and you start trading, chase the improvement. You're getting up at 9 now. You're looking at the charts. You're eating breakfast on time. You're eating a good, healthy breakfast. You're doing something productive. Like, chase that aspect of trading. The more you appreciate that, chase the discipline that it builds to follow your rules. Have a set of rules. Type them out, print them out, whatever you need to do in front of you, and check it off. Make a little calendar every single day you follow your rules. Whether you lost money or made money, if you followed your rules, check it green. Chase that. Make that your dopamine. Not seeing, $7 million Koenigsegg's that TJR buys and all these yacht trading people that are all just partying in Miami thinking you're going to be there in 2 weeks. You're not. And you never will be if you're looking at this with the wrong mentality, which is I need money now. Because the people who act like that in some businesses do succeed and they make money fast. But in trading, if you chase the money too hard, it's going to run the fuck away from you and it might never come back. So just keep all that in mind. That's kind of my 2 cents on this. And I know this was a longer video than usual, but it's kind of a month recap of September. And I need to thank you guys because we've had really good growth in September. It was my best month to date on YouTube, right? I had, 25, 30% more video views overall than any other month yet. Gained, almost 200 subs, which is more than I'd ever gained in a month before. So I thank all of you really deeply for supporting my channel. More to come. This is just the start. I'm not even at 1K yet. I got a lot of room left to grow and I'm excited to do it. And I want to help you guys grow too, which is why I have my free trading Discord. With that being said, if you guys are still watching this video, you're probably serious about trading. If that's the case, make sure to like and sub. And also, if you got any questions, any comments, any, suggestions for videos I should make, join up my Discord and reach out to me. I get back to literally everybody. I will not ignore your message. And that's a promise. So with that being said, appreciate you all. I'll catch you in the next one. Peace.